Look, I'm a very flexible person. I don't change my mind, but I'm flexible. And you have to be. You just can't have a wall and you'll only go. No, sometimes you have to go around it, under it, or above it. There'll be maybe things coming up. I speak to Tim Cook. I helped Tim Cook recently, and that whole business. I don't want to hurt anybody, but the end result is we're going to get to the position of greatness for our country.
All right, joining us now is famed investor and longtime friend of mine, Ken Fisher, executive chairman of Fisher Investments. Ken Fisher, welcome to the show. We appreciate it. And I know you oppose the Trump tariffs, and we are a free speech show. By the way, we've had Rand Paul on, who completely opposes the Trump tariffs. Anyway, tell us what's worrying you, please, Ken.
So first, I'm a thinker, not really a worrier, but thanks for having me. Always good to be with you, Larry. In my view, having spent studying this stuff when I was in school, having lived a world of it, I do not believe in tariffs. I think they're a form of command control. There's a lot of ways to get around them. They won't generate near the revenue that President Trump thinks they will. I'm a Republican. I've been a mega donor for House and Senate races for a long time. I don't like saying this stuff. I don't like this at all. But the trade deficits aren't the evil that he thinks they are. They're a result of things, not a cause of things. And normally, most of the time, when you look at the history of tariffs around the world, not just the United States, the imposer of tariffs is hurt more by them than the imposed. Another way I would say that is that the imposer is just a poser. The fact of the matter is, take trade deficits. Just like Mexico and Canada are our biggest trading partners and our neighbors, Germany and France are each other's neighbors and largest trading partners, sharing, in their case, a common currency. Germany always runs trade surpluses, big ones, has for a long time. France, trade deficits, although big but smaller. And yet over the last 5, 10, 15, 25 years, they've had very similar performing economies by most metrics, although GDP growth, inflation, et cetera, although France is actually done a little better than Germany. If trade deficits were causal, as the president said during his April 2nd Liberation Day announcement, that couldn't be. You can see that all over. We are not the biggest economy in the world, as Donald Trump says we are. We're the biggest single country economy, but we're only 25% of global GDP. The rest of the world's 3 times bigger. And when we impose, they can dilute around their 3 times bigger global economy. The Euro economy by itself is bigger than we are. And they free trade among themselves.
So, Ken, just a couple points. First of all, I'm inclined to agree with you about trade deficits. I think that's a weak read. I've always felt that way. I mean, actually, if the U.S. economy grows from tax cuts and deregulation and so forth, you know, we're going to import plenty, and that's a healthy thing. And I don't want a depression to get rid of our trade deficit. So I would agree with you on that. The only question I would ask, it's the same question I asked Rand Paul, who basically agrees with you on tariffs. You know, what if he is able, Mr. Trump is able to level the playing field on tariffs?
So let me speak to that, because I don't particularly disagree with you on that. Let me tell you the way I think about this. And I've said this before. I've said this before on Fox Business. I said this last week with Stuart Varney. I don't think the badness of what I think about in relation to tariffs is currently as bad as the fear about them and the irregularity of April 2nd announcement, last Wednesday, the 90-day pause, off, on, back, forth, none of which do I think is good, but I don't think it's as bad as the fear. I'm a bull. I believe the market will do well this year. I do believe completely what Kevin Hassett said, that the economy is strong right now. That doesn't make the tariffs a good thing. And mind you, if the president uses this 90 days to negotiate deals and then makes most of this tariff stuff go away, I think it's all going to be peachy keen, and I'm all for it. But let me make a different point. If it doesn't work that way, after this, is what the president needs for the tax cuts and so many other things to get through Congress. And in my thinking, those things should be done first. He doesn't need Congress to do these tariffs or any of these other trade policy issues other than a big trade deal like, a revision of the USMCA deal or some such thing. He doesn't need Congress for these things. For the tax stuff, which is terribly important because I'm a supply sider, for a lot of this other stuff, he does need Congress. And while he's got that going his way, he ought to go that direction because he's not going to have opposition from the Rand Pauls. I heard your interview with Ted Cruz, who is also opposed to the tariffs.
Right.
He's going to need these people. If he turns them off on this stuff, he's not going to get the more important things done. He ought to get those things done first. If he really believes in the tariffs, he could do them in 27 and 28. If we have problems before then and he loses the members and he doesn't get his legislation done, we're going to lose the House, we're going to lose the Senate, and the back of his presidency is not going to be what Republicans want to see it to be, because you know what will happen if the Democrats take the House and Senate.
Well, I hear you on that. Ken, in our last minute or so, you are one of the best investors of our generation. Your outlook right now, your advice on stocks?
So I've been real clear on this in the beginning of the year. This is a year where foreign does better than domestic, value does better than growth. The things that the president attacks are doing better than we are. Literally, Germany's up, Spain's up, Europe's doing better than we are, Mexico's up, Canada's break even, China's up, South Korea's up. We're down. If you think that through, the fact of the matter is part of it's part and parcel, but part of it's also Tech's time as for leadership is over. America's the big part of that in the global world. And the value part is mostly concentrated in other countries. This right now, whereas the last few years I've been advocating for growth, this is the time for value. And that's mostly overseas. It's not mostly in America.
I got it. Ken Fisher, we are grateful you came on the show and your point of view. We appreciate it. As